every metric, and we could say this, I think we've said this before, but we can reiterate this because it's true. Every metric that we have has worsened in the past year, with the exception of average sales price. This time over last year, you were still in an advantage as a seller. You're going to make more money when you sell your house. That's it. Okay, we have December numbers in now, and this is also the year-end recap. And what we're showing on the main gauge here is what looks like a more balanced market. In reality, it's a very, very weird market. And we're going to go through a little bit that with the numbers. Primary, the first thing is the number of homes sold in total is down month over month, obviously for seasonality's sake, but year over year significantly. And Danny, can you look at numbers here?
Yeah. So, I mean, we're down 6% just from November, but that's kind of normal, right? I mean, we know that nobody wants to, be moving in the middle of December, right? So things do slow down. There's the holidays involved there as well that drive kind of lower volume. The year before, we were down 4% month over month as you looked at December. So this is kind of normal. The thing that's different, we've seen this big drop off in volume overall, right, since the middle of the year, due mainly to just the rising rates for mortgages. So that's changed things a lot. So if you look at December of last year, people knew that mortgage rates were going to start going up. We heard rumors that was going to happen. Lots of people were flooding in trying to get into something before things changed. This December was totally different. We've had many months of raising rates, right? And so the level of demand has been very different now. And that's what we're seeing. December of this year is down 32% compared to December of last year.
The rates are affecting the amount of buyers in the market, the amount of people willing to move out of their nice cushy 3% interest rate to get into something double that rate-wise. And that's brought down total value of homes, total volume of homes, excuse me. But what you'll see is because the supply has decreased so much, the demand is still up. And on the next metric here, the average sales price, we're showing down from our peaks of this year, obviously, when everyone started to take the Fed's interest rate hikes seriously. We were starting to see movement in the market there. Things were still selling for way over. There was a hurry up mentality around getting your house. The rates started to settle in higher and higher, and total volume started to drop, including the average sales price. However, because total volume for buyers and sellers started to drop, the end result is the average sales price is still higher than this time last year.
Right. Yeah, that's absolutely right. So there was such a big run up, and you can see it in the chart there. I mean, just from December to June, right? I mean, almost a 20% increase in the average sales price. And even though that's tapered off over the most recent 6 months, look at your start point and your end point on that graph. That's December to December. You're still up 7%, $22,500 year over year. That's a good year. I mean, that's a good year, right? In terms of the appreciation of your home's value. So even though things are maybe tapering at this point, if you're selling now compared to selling a year ago, you're still coming out ahead. To your point around just the supply, what's been interesting to see is even though rates have gone up and we've seen this chilling that's happened in terms of the number of shoppers, you've got maybe first-time home buyers that can't quite get in now from an affordability standpoint. And as you mentioned, there's folks that are locked into a really nice 3% rate, and they're not eager or as eager to leave that as they maybe were 6 months ago. That's affected supply. It's come down quite a bit. People that would have been selling their house to buy a new one dropped. But they're also not buying a house. So you've seen the number of buyers and sellers drop at about the same rate. And what we're seeing is, even though there were only 1,700 houses sold in December, there's only like 2,000 that are on the market today. At that rate, they'll all be gone in just over a month. That's still technically a seller's market, which is what makes this very difficult to say. I mean, it's not traditional. There's things happening on the extreme ends, right? You've got this huge change in rates and affordability over a short period of time. And then the significant drop off in terms of, people that are shopping and people that are selling. So very interesting.
Yeah. So one of the parts of this that's weird is I know we're shifting into a more balanced market. Some of the metrics are still showing a very hot seller's market, including the month supply, like you pointed out. One of the things we're seeing in reality, case by case, is that the buyers that are willing to take on this interest rate or have cash that can do it, being very picky about their houses. So if a house comes up, great condition, well priced, we are still getting over asking price offers. That never happens in a buyer's market. So we're definitely not in a buyer's market. We are also still seeing significantly under bids that are getting sold. So some sellers are in a position where, they're willing to take that loss in the current market. We're seeing both. Buyer's market, you never see houses go over asking. I mean, never. We didn't used to have that. The past market is very rare you saw houses go under asking price. So we're in a weird place where it's not sellers or buyers, it's both right now. If you're positioned correctly as a seller, you can still, it's your market, seller's market. Still get over asking, still get less concessions, things like that. In the same position, if you're a very strong buyer, you can be more picky. You don't have to pay over. If the house isn't worth it, you can get more inspections, more concessions, things like that. So we're in a weird mix of both markets right now. And I'm curious to see how this is gonna shake out. Every metric, like you're saying, Danny, so far this year, with the exception of list price or sales price, every metric has gone down. Number of homes, including the next several here, percentage over and under asking lists have gone down. Price reductions have gone up. That's a negative metric. Days in the market has gone up, right? So we'll have to see. And we were talking a little bit before this about, is it a seasonality thing? Are we going to see who's buying in this market? Is people that have to do that? I don't think that's the case. Like, we're kind of entering a sweet spot for some buyers. And if you think about it this way, I know the interest rate is significantly up, but we don't have to put as much down in cash over asking as we did in June of this year. So, for example, let's say you're buying a $500,000 house. It almost took $600,000 to get that house, right? And 100 of that had to be cash. So whatever you're selling, let's say you were selling a $200,000 house, you have equity there. That was higher in June also. It's still pretty high today. So you can take that equity and instead of putting it into cash over asking, you can actually buy down your principal and end up with a much slower payment, even though your rate is higher. Does that make sense?
It's easy to ignore the fact that, people were paying above what houses were listed for. And in a lot of cases, above what they appraised for. That's crazy, right? I mean, that's a sign of just how severe the seller's market was that we were in before. And now you don't have to do that. You don't have to resort to that if you're a buyer.
Yeah, the way it shakes out, the numbers shake out now for a New Albany house, which is, I think most of Central Ohio can agree, New Albany is a nice community. It's more of an affluent community, newer community, and expensive. And let's say it's a $700,000 or $800,000 house in New Albany. That payment comes between $5,000 and $6,000 a month. This is a big, beautiful, newly built house, well appointed, right? Safe neighborhoods, beautiful, everything. That makes sense for a nice luxury, we made it house, $5,000 a month, $6,000 a month. That makes sense. Now, before, again, you could have bought it with a lower interest rate, maybe $3,000 a month, but that doesn't mean that it's not worth the higher payment. It was just a better deal before. It's still good now. Now, if you can take some of that equity and buy it down, if you can refinance in a year when we expect mortgage rates to dip below 5 or close to 5, that's a lot off of that $5,000 payment. So I think people are starting to realize this. We had a knee-jerk reaction to the higher interest rates, but the Fed is calming down with that. I don't know how this inflation strategy is working out for them. I'm still seeing inflation, but people are getting used to the idea that that rate, 6%, is still not a bad rate, and it might get better. We were just in a significantly good rate period, and it's not going to last. And I don't expect to see that again. So I expect to see more than this in the coming year. I think we're going to move to even a more balanced market, which I know we're right in the middle right now, but we still have bids over asking, bids under asking, high interest rates. I think 7% is too high. I think we should be in the 5s. I think if we can chill out in the 5s, level out, we're going to have a very consistent market. Number of houses sold, more sellers come on the market. The more sellers that come on, there are buyers for these houses, right? As long as you get it priced right and do your homework, someone will buy your house, right? Columbus is still a growing market. It's still a hot market. It's still an affordable market. So I feel like we're down over our peaks, but that was the exception, not now, if that makes sense.
Yeah. So, I mean, I guess the message is if you're looking to sell your house now and you're kicking yourself because you missed the peak, well, expand your time horizon there. Look at this December versus last December. You're still up. Your house still appreciated 7% year over year in most cases. You're in a good spot to sell. If you're a buyer, you might actually be, and this is, you and I were talking about this, Rob, you might actually be in a bit of a sweet spot now, right? Compared to where things were before.
Yeah. Rates are up for sure, and that hurts a little bit, but you have significantly less money out of pocket in the beginning that you have to cough up with. A lot of the issues we were seeing in that very, very hot market was thousands, tens and thousands over asking price, and some buyers couldn't do it. So when you hear stories of buyers, we put in 8 offers, we didn't get any of them. I have to think at some point they were getting good advice as to what the house would sell for. Someone just beat them, cash flush people were beating them. Not everybody has hundreds of thousands to throw down on a house in the beginning. It's pretty common, and you don't need that anymore. So, and if you do have that, it can just reduce your payment overall. So the interest rate's not going to affect you so much, especially if your cash interest rate doesn't mean anything to you right now, right? So it's kind of a sweet spot for buyers. It's still a good time to move. The pricing, the monthly payment to what you get still makes sense in Central Ohio for the most part. It's still a good time to move. So if you are starting a new family, having kids, you got your diploma, starting your new job, there's all kinds of reasons to move, including coming into and out of town. So we're still going to have a market. I expect us to ramp up this year. I expect rates to cool down a bit. We'll just have to see what happens. But I think that it's a pretty solid time to be a buyer, even if you're selling a house, even with a lot of those metrics declining, because you don't have to deal with so much stress on the buy side.
Yeah, we'll see what happens. We'll come back in a month and see what the numbers look like. But any closing thoughts there, Rob?
Kind of hope people get over the idea of the rates are too high now and prices are falling like crazy. There's a lot of doom and gloom out there in the real estate market. We're not actually seeing that. So, that's an important point. I think everyone needs to stick with them. Sellers are doing well and buyers are doing well. So if you're in a position where it's time, don't let the interest rate stop you because it's not a permanent thing. If it falls, you can refinance. That's the end of that. I guess we'll just check in next time and we'll give you tips and tricks as we go, and little anecdotes as we have, and we'll check in more frequently. I think that's one of our goals for this year. Is that right, Danny?
Absolutely. All right. We'll see you in a month. Wait. Oof. How do I stop the recording?
Oh, you didn't stop recording?
Oh, God.
Now you have to edit.
Everyone heard that.
I don't know what I'm talking about anymore.
You were doing great. You're doing great.
How are we transitioning? You got to have a turn too, bro.
I know. You would try it again?
When were you going to jump in there, homie?
I was waiting for you. You were doing such a great job. I was like, this guy's got it. I'm going on break.